Afternoon, folks, and thank you very much for joining us here today for this BetaShares special event focused on the Australian technology sector. My name is Peter Harper. I'm an Executive Director and Head of Capital Markets at BetaShares, and I'm pleased to be kicking things off today. We'll start with just a quick overview of the event and some detail on what we'll run through today. At 12:30, we're going to have Alex Vineker, BetaShares CEO and founder, and he'll be sitting down with two of the most influential technology leaders in the Australian market, being Anthony Eisen, CEO and co-founder of Afterpay, and Richard White, who is CEO and co-founder of WiseTech Global. This will be set up as a fireside chat, and it'll be an opportunity for them to share some of their stories on entrepreneurship, innovation, and to discuss where Australian companies sit in the global context of technology. They'll also be discussing what the future might hold for the Australian technology sector. At just past 1:30, we'll move to Alan Israelstam, BetaShares co-founder and head of strategy and marketing. And Alan will be sitting down again with some renowned entrepreneurs and VC investors in the Australian technology segment. They'll delve into where Australian technology sits in terms of the scene, the environment that we're seeing for venture capital in Australia at the moment, and how some of these startup businesses have transitioned into successful tech businesses in the Australian economy. The inspirational tech leaders that Alan will be joined by are all CEOs and founders of those businesses, and they include Tim Fung from Airtasker, Manuri Gunawardena from HealthMatch, Nathan Walsh from Athena Home Loans, and on the VC side, we'll be joined by Daniel from Paul Bassett of Square Peg Capital. What we'll start doing now is to look at an overview of the first session that we're going to be doing today, which I'll be moderating. And that session is here to set the scene on the Australian technology sector and build the investment case for technology in Australia. We're going to be talking about the growth of the sector, how it's evolved, and why it's been a fantastic opportunity for investors since the launch of the S&P ASX All Technology Index. So let's get started. And to begin, I'm going to introduce our panelists for this first session today. We have joining us remotely Daphne van der Oord, who is head of Australia and New Zealand for S&P Dow Jones Indices, who are, of course, the index provider for the S&P ASX Australian All Technology Index. And I'm also joined live here by Max Cunningham, Executive General Manager of Issuer Services and Investment Products at the ASX. And of course, the ASX is the home for listed technology investments in Australia. So thank you very much to both Max and Daphne for joining us for this session. I'd like to start off with a question I'll pose to both of you. Perhaps I might start with you, Max, and then over to you, Daphne, given you're in the studio here live. But technology's long been a meaningful sector within global markets, but we haven't seen it as a proportion of the local market historically being as high. What are your perspectives of the growth on technology within Australia?
You're right. I think it has been a long time coming, notwithstanding, we've always said Australians are early adopters of technology. But look, I think really what we've had here is this, I think our compulsory superannuation and the large pool of capital has really enabled key stakeholders like the ASX, VCs, and I think more importantly, founders, and some of the founders you're going to be speaking to this afternoon, be able to come to market earlier perhaps than they would in overseas market. And what we've seen actually is some of these companies develop some globally leading businesses. And you're right, it has started off small. In fact, you could say this has been 2 decades in the making. We had an early glimpse of what technology could be with the dot-com boom, but then sort of it burst so dramatically, it probably took some time for it to come back. But it feels like it's here to stay this time.
Yeah, I think that's definitely a sentiment that we'd reiterate as well. And Daphne, what's your perspective on the growth of technology in Australia at the moment?
Well, whilst it's true that the Australian share market has historically been characterised by both financial and the material sector, the reason for developing this index earlier this year was in part to shine a spotlight on the broad-based growth in the technology theme more recently. And if we could demonstrate this, thank you, you'll see from this slide that the number of companies within the S&P ASX All Technology Index has more than doubled over the last 5 years, with the total market capitalization now at around 135 billion, which is more than 5 times what it was back in 2015. For further context, today there are 20 companies out of the 58 within the S&P ASX All Technology Index, which are also members of the S&P ASX 200. If you were to combine the index weight of those 20 companies, they would represent an index weight within the S&P ASX 200 of 5.4%. Now, just 5 years ago, there were only 7 companies within the S&P ASX All Technology Index, which were also members of the S&P ASX 200, for a combined weight of less than 1%, in fact, 0.9%. That's tremendous growth.
I think that's right. I think it certainly demonstrates the strong growth profile that Max was suggesting earlier as well. And I mean, looking at those numbers, I think what it also suggests is that all other factors being equal, if you see a sector that's demonstrating above trend growth, then over time you would expect that sector's proportion of the total index to obviously rise. And that's certainly something that technology arguably has strong potential to do. We've got another question here for Max. I mean, there's such a breadth of technology available globally. What makes Australian technology different? Why should investors be looking for what we offer here locally, as opposed to just investing in your offshore, NASDAQs or the like?
Look, a great question. I think one of the really interesting things about our market is that we enable earlier stage companies to come to market, and investors therefore can share in a lot more of that upside. The US market has actually become so encumbered with Sarbanes-Oxley type regulation and costs that companies inevitably are putting off going public in the US much further down the track, and most of that money or upside, the huge amount of money that you're seeing, is being shared by private investors. What I would say is, if we and this chart up here that is very interestingly, if we actually look at the companies at the bottom, the top 5 foreign tech IPOs in the in 2019, Fineos and Life360 are great examples of companies that have told us those market caps that they came $600 million on, they consider themselves well too small to go public in the US. We go back 20 years ago, Amazon, Netflix, 2 of the famous FANGs stocks, their market caps were $500 million. All of the market caps this cycle in the US have been $5–10 billion upwards, and that's because a huge amount of the de-risking has been taken place. So, and I think the prime examples when we compare the FANGs with the waxes here, companies like Afterpay, tapping on $20 billion plus, was $150 million market cap. So that's a great example, I think, of what the homegrown capital market can do for both companies and investors.
Yeah, I think that ability to get in the early stages, as you said, is largely retained by private markets offshore, and so I think that's a very valid point in terms of being able to get exposure to that early stage investment that you can't get elsewhere. Daphne, I'll just go to you now for our next question. Many Australians may well have made direct investments into technology companies such as Afterpay and done very well out of them. Why might investing in technology via an index make sense relative to investing directly in some of those underlying companies?
Well, in developing an index which seeks out a broad technology spectrum, we set out to build it from the ground up, which means starting with the equity securities listed on the ASX as our initial universe, so the whole equity securities universe. And the result of that has been S&P ASX All Tech Index, which cuts across a number of gig sectors, from information technology to communication services, consumer discretionary, and healthcare. With the subsequent application of this index to an ETF, By executing a single trade, investors can now gain both diversification and participation to the technology theme. Both characteristics are important, especially during times of volatility, which this year has clearly reminded us all of.
You know, I'd add to what Daphne said there, this is all about risk profile and risk spectrum. And I think one of the great things about the index is you've now been able to break out technology into a single subset. So people who may not feel comfortable individually stock picking can get an exposure through that footprint. And one of the great things about the ATEC ETF is it enables them to access that index in a cheap and effective manner and get that leverage and put that into their overall asset diversification.
Yeah, I think diversification, they often say, is the only free lunch in investing. So,
Yep.
Certainly something very important. And I think an interesting factor with a market cap index, such as the S&P ASX All Technology Index, is essentially, this is a very fast moving space. And it's one where you really, by virtue of a market cap index, you're backing your winners and you're cutting your losers over time, which is something that individual investors may not have the in-depth knowledge at a company level to be able to manage that themselves directly.
And it's costly.
Yeah, well, exactly right. Exactly right. Just looking at the performance of the index now, the index has returned about 46.14% since inception, relative to the MSCI Global IT Index at about 26 and a bit percent. So over that same time period, quite strong outperformance from Aussie technology. What's driven these outcomes?
Well, look, I mean, again, I think, and I think we've got a chart about to come up, which actually encapsulates some of that, but it gets back to the point we were making, which I think is a lot of these companies, if you look in the top right-hand corner of this, you'll actually see, I think, that outperformance that you're talking about, the light blue line, is how well this has performed against a range of both domestic industrial and international technology indices. And that reflects, I think, the growth in market cap and performance of companies like Afterpay and WiseTech, Appen and Altium, but also some of the up and comers out there like Fineos and companies like that. So I think it gets back to that. But the other interesting thing that I think on this chart that I get very excited about is the chart underneath that, the average daily traded value, which is sort of like to some extent an extension of what Daphne was talking about earlier on.
Yep.
And we've seen, going back 5-6 years, these companies, our market turns over about $8 billion a day. We were turning over $50 to $100 million in technology back 5-6 years ago. Today, we're tapping on $1 billion. So it is a sector that cannot be ignored. I think the other interesting thing on this chart is we've now got 30 companies with market caps over $1 billion. And a growing international cohort. Those flags there, will always be, Australia will always be the core and the basis of our market, but we've got a great range of international markets, fast growing, particularly from the US and New Zealand, and hopefully Ireland and Israel coming fast behind as well.
Yeah, it's all great points there. And I mean, I think the other thing to consider is, everyone often talks about the fact we're in a low growth world. And so, it is actually really difficult to find true structural growth profiles in markets today, or at least increasingly difficult. And so, what we often hear from investors is the ability to find a sector that's demonstrating that true structural growth profile, irrespective of the cyclical booms and busts of the economy, is something that's valued quite highly within many portfolios.
Absolutely, and I think the thing that investors appreciate, but often commentators overlook, is these companies use less capital. So they're more leveraged, not necessarily in the concept that we think about it in balance sheet terms, but they're materially got upside leverage to new customers and revenue and issues like that. But that leverage comes at a cost, often higher multiples. And that's why we've seen that volatility. These sectors do have a little bit sharper volatility. We saw that back in March,
yep.
And before this index launched, we even saw it in November, December, when there was market volatility out there. And that, in my view, again underscores the importance of products like the ETFs that can give people exposure in a broader sense.
I think also just touching on some of the names that we saw on screen there. I mean, we talked a little bit earlier about why Australian technology, but many of these businesses are global leaders in their space, and operate truly global businesses. Whether it's your Afterpays, moving into the US market, and WiseTech Global with customers all over the world, REA car sales. Really taking Australian technology to the rest of the world, and standing on their own 2 feet proudly in doing so, which I think is a great thing to see.
Yeah, look, and I think that list is going to continue to grow. One of my great experiences in the last 18 months, Altium, built in Chatswood, but their head office and their CEO, who I had my first meeting with, was in San Diego. So these companies are doing a range of things. They're either exporting services, as you said, like WiseTech. Afterpay have got like a beachhead now in San Francisco, but it's exciting. And I also say to government and media as well. It's important. These guys are actually selling Australian services and IP and bringing revenue back into Australia. So I think it's important from a nation building perspective as well.
Totally right. And Daphne, I'd pose a similar sort of question to you. We've seen outperformance of Australian technology relative to global technology, but if we look within the context of the Australian market, how is Australian technology performance compared to other sectors of the Australian market?
Again, we built this index to help shine a light on the technology theme, and generally speaking, I think most people would be very familiar with financials, resources, and REITs, but the S&P/ASX All Tech Index has significantly outperformed all of these major segments. In addition to outpacing the broader market S&P/ASX 200 benchmark, not just year to date, but over trailing 1, 3, and 5 year periods up until the end of September. The key point to add here is that the Australian market overall is very income focused. In contrast, the S&P/ASX All Technology Index is very growth oriented, and thus very distinctive from the rest of the market that we're familiar with.
Yeah, I think that's also a very good point there. Look, we touched a little bit earlier on index construction. I think it might be worthwhile if we can just to discuss, at least at a high level, some of the companies we went through. WiseTech, obviously logistics, and we're going to hear from them, and Afterpay later on. Xero, another example. Max, I mean, would you be able to comment? Xero used to be a New Zealand listed business. Is that correct?
Yes.
And that's now part of the ASX and therefore eligible for inclusion into the index also, and is quite a significant part of that index.
Yeah, look, and I think it's a great story for actually. I think a lot of investors learned a lot, and companies learned a lot about index calculation and the S&P methodology through the Xero story, because they had successfully executed a dual listing story for a period of time, but they actually found that they weren't getting the full S&P methodology weighting. And so by consolidating on ASX, they literally, I mean, it's crazy, isn't it? But a company of the same, nothing changed in the company, but overnight it went from 250th to 80th in the index. And while I say it sounds crazy, there's a strong logic towards it. S&P is one of the reasons we partnered with S&P is they're the leading globally recognized index construction partner that you could find. And they can't have double counting in their indices. Sorry, I'm probably stealing a little bit of Daphne's thunder here.
I'll give Daphne a moment to add anything in.
But look, I think more broadly to your question, it has a lot of people have learned a lot through both Xero and also the advent of the tech index about why it's important to be in an index, why it's important to have a certain free float. And dare I tempt fate to even say people need to know what industry sector they're in as well. I'll hand that to you now, Daphne, to add a little bit of commentary, or expertise, I should say.
Oh, you had all the fun things to say, Max. So, as I mentioned previously, the construct of this index starts at the very full universe of the ASX listed equity securities. And then we screen them for minimum float adjusted market cap and liquidity thresholds, of which there are 4 in total. And that will essentially capture companies beyond the S&P ASX 300. The firms that meet these requirements and are also categorized by the 5 named GICS groupings that are listed on that slide, if that can pop up, slide 3. Those GICS groupings are the information technology sector, in addition to the consumer electronics, internet and direct marketing, retail, interactive media and services, and the healthcare technology sub-industries. The index is then weighted by float adjusted market cap. It's subject to a 25% single stock cap, and it gets rebalanced in March, June, September, and December of every year. It's worth noting that the index calibrations also enable an earlier consideration of tech-themed IPOs by making them eligible for inclusion at these quarterly rebalances. And in combination with the considerations around the investability requirements, this indexed solution supports readily accessible, innovative businesses while lending itself to an index-based financial products such as an ETF. With respect to some of the companies within the index, I don't know if you wanted me to comment on that now, Pete? Or
Feel free if you would like to, Daphne.
I'm on a roll. Well, all those tuned in to this event will soon get to hear from the CEOs of Afterpay and WiseTech. Both companies are captured within the information technology sector, but reflecting on the 8 companies that joined their ranks in this index after the recent September rebalance, this index has also added names like Match7 Technologies, which is within the healthcare tech sub-industry.
Excellent. Thank you, Daphne. And Daphne, just another question, this time from the audience that's come in. Afterpay currently makes up 17% of the S&P ASX All Technology Index on a market cap weighted basis. How does the index seek to manage single stock concentration and ensure diversification?
It's a really good question. And as mentioned, the index is currently subject to the 25% single stock cap, which is generally accepted as providing respectable diversification. It also ensures that the winners have scope to run for longer, supporting that growth characteristic I referenced earlier. Given the growth in technology to date and the current global environment, likely the impetus for further growth will continue in this technology theme, along with the number of companies within this index to provide further diversification. I'd also like to add that the index rules are reviewed to ensure that they are consistent with developments within the market. And these are conducted through market consultations, enabling all stakeholders to provide input.
Thank you, Daphne. And just to finish off, an investment in the index via the ETF actually results in real money investment flowing through to those underlying companies. What does that real money flow do to foster further advancement in the technology industry and sector in Australia?
Look, what I would say is ultimately what it does is increases liquidity, lowers the cost of capital for those companies, ideally ensures that those guys can get a good funding mix and be internationally competitive, is my perspective. And I think if we go back 5-10 years ago, I talked about that sort of $50 million worth of trading versus going to $1 billion. That meant a lot of these companies were relatively illiquid. If they had to raise capital, they were doing it at large discounts. This index and the ETF, which complements it, are further steps, I think, to really making sure that Australian tech companies listed on the ASX are globally competitive in every sense, including in capital terms.
Go Australia, go Aussie Tech. I think in the interest of time, that's all we've got for today. I'd like to say thank you to both Max and to Daphne for joining us today and for their insights. Thank you also to everyone who's joined us so far. We'll now take a short break before our second session of the day. Joining us next will be Alex Vineker, BetaShares CEO and founder, and he'll be sitting down for the fireside chat I described earlier with two of the most influential technology leaders in Australia, Anthony Eisen, CEO and co-founder of Afterpay, and Richard White, CEO and founder of WiseTech Global, to discuss entrepreneurship, innovation, and where Australian companies sit on the global stage.
Good afternoon, everyone. My name is Alex Vineker. I am very grateful to have the opportunity to sit down for a virtual fireside chat today with two of the most incredible founders of exciting Australian technology businesses, Anthony Eisen and Richard White. Hi, Anthony. Hi, Richard. I've been looking forward to this conversation and this opportunity to sit down with you virtually on this occasion, of course, for quite some time. As I'm sure thousands, many thousands of the investors and entrepreneurs and aspiring entrepreneurs that are joining us live today. Every successful business, of course, by definition, involves a story of success. But at the same time, more often than not, every story also is a story of determination, overcoming adversity and occasional failure. It's a story of not giving up, perseverance, maybe mixed in with a little bit of good fortune along the way. You guys have founded two of the most successful Australian technology companies, true Australian success stories. You defied the odds. You defied the critics, you defied the naysayers, and I've got no doubt you've got so many more exciting chapters ahead of you. Your successes, of course, are very, very well documented. Your companies are very followed, you as individuals are very well followed and understood. However, today, I wanted to spend part of our time that we've got together really focusing on the difficult parts of building the business, on the challenges that we have to endure as founders along the journey. So on that note, over to you, Richard.
Well, I think there's a couple of things that fundamentally create founders. First of all, I think we want to change the world in some way. We want to do something which is meaningful, that has something positive to give back to society. It's not about the money, it's about something much greater, and the innovation to do that. And then you mentioned the resilience required to build a business. There is an enormous amount of naysayers and pressure points and things, people telling you can't do it, it won't work here, it's not for Australia, you can't build a global business out of Sydney and so forth. And so this grit or resilience is really fundamental. And you also have to have a kind of a lifelong learning idea that you constantly strive to understand more and to develop the skills. Because when you start as a small business, the things that you need to do are very narrow and quite focused, and not particularly like they are going to be when you get to being a larger business. And you've got to work on the culture of the company. I think people understand culture, and I'd like to think that I have some skills in that area. People who understand culture understand that working with people is an important capability to bring people together, to set a common goal and to drive things forward. And you've just got to keep that idea that it's not about you, it's about all of the other people that matter in the business, and about the customers that matter, and about the stakeholders that matter. And so you've really got to be quite selfless in the sense that you've got to be able to drive the business forward for reasons that are much broader than what's going on in your life on any one day. I might leave it there for a moment and let Anthony have a comment.
Well, there's so much to that well, everything to that I 100% agree with. So maybe I can make a couple of additional perspectives without really changing direction at all. But I think you mentioned, Alex, lucky moments that go with a lot of things, and yeah, absolutely count my blessings in the journey. So lucky to have an amazing co-founder, lucky to have a whole lot of people around us at different stages that helps give you that resilience. helps give you that determination. I think a really interesting part of having resilience and fighting against naysayers and all of those other things is there. But I think also scaling is also a very hard thing to do. I think you hear it a lot, and it makes sense that, it's hard to get bigger, but it actually is really, really hard to get bigger. And I think you go on a bit of a personal journey with that as well. It's interesting as a founder where, you spend a lot of time and an incredible amount of energy every single day just trying to push something forward. At a certain level of scale, you can also become the handbrake as well as the accelerator. And trying to learn as you go, trying to sort of break through those barriers are an amazing personal journey. I mean, for Nick and I, one of the key things about scaling was really our team and people. In fact, it's everything. And, part of the decision we made when we're sort of faced with those challenges and wanting to try and scale responsibly is, to hire people that are better than you, bring in partners that in terms of what they do can really take it to a stage that you can't. And I think learning how to balance that and move forward with it is also part of the challenge, but the opportunity as well.
That's perfect. And Anthony, I love the point that you just made, about people. So many, so many founders, sort of take the limelight, often without necessarily, sort of acknowledging the, sort of the huge teams, and the huge effort that teams really, put in. Can I just ask you on the point of people, and we've been sort of, from our own perspective, have been going through, the exercise of growing and scaling, etc. And as a founder, there's a bit of tension always between kind of striving for that perfection that's in your head, that you are seeking to execute on, and at the same time empowering the team and letting go, right, and just really allowing the momentum, sort of to carry. I'd love to get your perspective and Richard's just on that side of things.
Yeah, I think it is exactly the point. It sort of goes back to my point before about accelerator and being the handbrake. Learning to scale is one thing, but the brilliance of what people can contribute and taking full advantage of that is a skill that you have to learn. I think in some cases it doesn't come naturally, yes, because you're looking for perfection, or you're so used to, doing everything that's involved, including making the toast and turning out the lights, depending on the beginning or the end of the day. But I have to say, from our experience and our journey today, just feel so incredibly blessed by the people that have come into the company and made it their own. And, just to the point where we wouldn't have had this opportunity if it didn't happen. And a lot of the vast majority of, really important leaders in our business, I do think a bit of a stroke of luck comes with it, because, the energy that you create together has been what's really driven us forward. So we do feel extremely blessed in that regard. I think culture is something that gets thrown around a lot as a concept, and it's important, but everybody's responsible for culture, and I think it evolves over time as well. But when you can capture the momentum of just brilliant people shaping the journey with you, that's actually when we started to accelerate, the fastest, and in a way where a lot of us sort of just gained a whole lot of leverage that we didn't have as a very small group.
That's great, Richard. I'd love to hear your thoughts on that as well.
Well, there's a couple of points, and Nick and I, Anthony and I seem to always align on a lot of things, because as technology companies, you have had to learn a number of the lessons in common. We're dealing in a very complex industry. There's a lot of very complex technical things to do, and you have to have very smart, brilliant people around you, and those people tend to want to be innovators. They tend to want to make a difference in the world themselves, and leadership and the things that you have to drive as the CEO or founder of a company like WiseTech is you must inspire people to reach for the stars. You must inspire people to think differently. I have all these little slogans inside the company that are designed to allow people to think differently, and it's an important culture. Culture does come from the top, but it also has to permeate everywhere, and you have to listen to it across the company and make sure that it's driving the business properly, and it's the right sort of culture. Openness, innovation, striving, resilience. These are all things that you can, to some degree, embed in the culture and help people forward with. And to Anthony's point, you can be the handbrake if you take too much on. Equally, people want to see you being next to them and working with them and striving in the same way that they do. And so having a leader that can help lift things and work with people in the trenches while things are going fast and hard is one of the ways of expressing that culture as value. Setting clear goals, driving momentum, and really thinking about how people want to engage and how to make that engagement meaningful for them and the company at the same time.
Richard, what would you say is the hardest part of your job today?
Oh, I'm not sure I can pick one thing. There's the thing that's hard for anybody ultimately is figuring out all the things that you have to do and what's not important. There are so many things that get pressed upon you, by the world, by the market, by the industry, by the customers, by everybody. And the cacophony of that is so large that you can get lost in the noise. And ultimately, I think good leaders and good managers and good staff have to pick the few things that they can do and go for those and get those done and then pick the next thing. You just can't do 10 things at once. Nobody can. And it's so important to pick up the things that really matter from all the noise around you.
Indeed. Today, both of you obviously are running businesses which are worth many billions of dollars and very successful. If I may just take you back, maybe several years or decades, just to the moments when things were looking a little bit less certain. I'd love to get maybe starting with you, Anthony. Maybe talk a little bit about moments of doubt. Moments of vulnerability and maybe periods when you feared that you may not make it. Have you had moments like that? And I'd just be very interested, and I'm sure all of our viewers would love to get a bit of a perspective as to how you pulled through those times and when you had those thoughts.
Yeah, I think there'd be very few businesses, Alex, that didn't have those moments and didn't probably have several of them. At various times for different reasons. Sometimes you perceive it actually to be more fragile than it is. And I think when you're just so passionate and you give your life to something, it all feels like that in the moment. And then a year later or 2 years later, you can look back and say, well, why did you react that way, or why did you think it so dire? But look, there's been a continuation, particularly when you're a young company and you're doing something new or something different, that continually throws up, this idea that you have to try and get to a proof point. You have to try and reach a milestone to illustrate your right to exist, to be honest. And that's what it felt like for us very early on. It was interesting because we knew that our customers loved what we did, and the amount of virality that came from launching Afterpay into the Australian market initially was met with just so much customer positive reaction that, you know, we knew we were heading in the right direction. Everything else that went around our business about making space to grow, whether that was from a capital markets perspective, other stakeholder perspectives, making space just to try and order in a business-like way what you felt to be the right thing and what you're experiencing, and to iterate and, you know, innovate off those early years was just a constant struggle. So when you think about, you know, all the things it takes for businesses just to continue and do well, to scale responsibly, you know, if any one of those pieces fall out of the puzzle, you know, it causes a huge amount of stress and requires a whole lot of, you know, forward thinking. We use the term in the business making space a lot. And, you know, part of the big challenge, I think, particularly as a young business, was just making enough space so you could get to the proof point, get to illustrating what in fact was the whole thing, the biggest value driver. In our case, it was the day them, but money, or you got to bring people into the business is always, you know, the chicken and egg game that you play. And if one of those pieces falls out, then, you know, it causes a lot of stress.
Absolutely. Richard, how about you? Have you had you know, those moments when you felt things may not you know, sort of may not pull through?
Certainly, I had a career before WiseTech. I had 4 other businesses, and they were much smaller. And I really started working with my grandfather and father very early on in life. And so I saw many moments when these stress points occurred. And over the previous businesses that I created and had sold, I learned a lot about being resilient and also about protecting oneself. I went into creating WiseTech with the idea that cash was king. We needed to have a buffer, that we were always going to be profitable, and we were going to figure out a way to be profitable and high growth from the very beginning, because the industry we're in needed that reassurance from us that we were going to be profitable and survive. And whilst, you know, in WiseTech's career, there were many events that were challenging. We had, you know, various recessions and economic downturns, the dot-com crash, the global financial crisis of 2008. We actually went through all of those very well. And, you know, you get various attacks from people, you get various naysayers, you get people telling you that it can't be done. And it's the same sort of thing, but you just have to develop that clear vision and resilience and have enough buffer behind you and enough confidence that you can continue on your way. It's not that I don't have fears about things. In fact, if you are not able to imagine what can go wrong, then things will go wrong. You have to think of all those boundary conditions and edge cases that you need to manage for. But the business has been around for a long time, and we were pretty much profitable the first year of our operations. And I've had tremendous people around me to help, you know, spread that load and to help me when confidence was needed and so forth. So I think most of my business experience around mistakes and running close to failure happened before WiseTech, to be fair.
Indeed, indeed. Richard, would you say you were born with a bit of an entrepreneurial gene?
This is the nature versus nurture argument, isn't it? I think I grew up in a large home with my grandparents and parents, and my grandfather was a local entrepreneur, and I watched him from a very early age. I was named after him, and actually live in his house now, by the way. I bought it back a while ago. But the thing is that I watched my father and my grandfather, you know, build things and grow business and do things. And so I guess I didn't actually know what entrepreneurship was. I just knew what my parents and grandparents did. And I just absorbed as much as I could from them. And my first business venture was, you know, just a way of doing, I want to do my own thing, but I want to actually take all the things that I learned from my father and grandfather and then experiment with that, make the mistakes and pick up and keep going and you know, fall over, dust yourself off and grow again. And it worked very successfully. So I didn't really know what entrepreneurship was for probably 10 years after I was running businesses, and then I heard the word entrepreneur. I thought, oh, that's an interesting word. Remember in the 80s, entrepreneur was a very nasty word. Christopher Skase and Alan Bond. horror thing, right?
Indeed, very much so. Very much so. That's great. Anthony, you had a very interesting and incredible career before starting Afterpay. Where do you sit on the nature versus nurture, and maybe just talk a little bit about sort of your journey to kicking things off with Afterpay?
Yeah, I think I've always had an entrepreneurial gene, but probably a little bit repressed and came out later in life. And in some ways, I think I've probably done my career in reverse. But look, I spent the earlier part of my career in accounting, and then banking, and then investing. And it was amazing. It gave me an incredible grounding. It allowed me to see the world and, you know, see a whole lot of different businesses, companies, and understand risk, understand the importance of, you know, a whole lot of the dimensions of the business that we're employing today. Until Afterpay, though, I'd never actually run a business, and at least not a business that you know, was started from the ground up, and we employ close to 800 people today. So it was learning a brand new skill, and the entrepreneurialism factor was amazing, and almost felt like a continuation in terms of always wanting to think about new business models. Again, meeting my amazing co-founder in Nick really just helped sort of spur that on. But yeah, in a lot of ways, it was doing things in reverse. I think having gone through the Afterpay experience, at least to date, it would have made me a much better banker and an investor in the time, because you just realize that business is just about people. It's about actually making things simple, not more complicated. And going through things with a team is something that you really just almost can't explain. It's not textbook like, but to do that, look, now as opposed to earlier on, is just the way things have kind of rolled for me in my development. I think the awesome part of Nick and my partnership is that we bring sort of you know, raw entrepreneurialism with experienced and a little bit of suppressed entrepreneurialism to the table at the same time. But to date, that's served us well, and I think we've learned from each other really well as well.
That's phenomenal. It's a phenomenal story, and if one was to take something you know, out of that, is you know, is probably the fact that there is no one path, right? I mean, there's absolutely no one clear or certain path, you know, to building a successful business. And I think for all those people that are listening, you know, sort of to us and watching us, I'd love to sort of take that forward a little bit, and maybe sort of extract some you know, some words of wisdom from both you, Anthony, and Richard, in terms of advice for people who are, you know, either thinking about starting a business and maybe too afraid, or maybe they have too much to walk away from if they are an existing job as an accountant or banker or engineer. How do you get that courage, basically, and how do you get the momentum and maybe a little bit of madness that's required to you know, sort of to you know, to risk it all and start something from scratch?
Yeah, look, I don't think it's easy. I really just don't think it's easy. We're all human, and we're human for the right reasons. It's quite difficult to just, you know, walk away from things completely, and just try something new. I'd contextualize it perhaps slightly different. Folks would probably underestimate just the power and the experience that they build up from doing what they do already with passion and determination. I think if whatever you're doing, if it's founded with, you know, that level of enthusiasm and etc., it bodes well for the next thing. I think if you can, sometimes you need a little bit of luck. Sometimes the stars have to align a little bit. Sometimes you have to be put into a circumstance also that makes you feel good about taking the risk. But I'd encourage everyone to, if they have the passion to do it, do it. You know, the longer you wait, the more reasons you have not to walk away from something, etc., and it becomes obviously a little bit harder. The other thing is, I'd say, do it with a view that it doesn't have to work out the way that you think it should before you've started something. The biggest lesson and privilege that's, you know, been bestowed, I guess, on me with this journey is that it actually just didn't have all the right form to it at the start, you know, and that really went against my personality, to be honest, and my history. You know, I needed everything to be very well constructed. As soon as, you know, I got a little bit more comfortable to work in what is, I define as being a true partnership, comfortable where you're really just focusing on, you know, the really core element that you want to experiment with, or the thing that you're passionate about, or you want to innovate on, then things fell into place. We didn't have all the business model completely worked out at the start, etc. But if you can fuel it based on a passion and what you love to do, and something that really, really sort of gets you from an intrinsic point of view, I'd say just give it a go. You'll regret it otherwise. And it's just awesome when the stars align, when you can take that plunge.
That's great advice. Great advice, Anthony. Appreciate it. And Richard, I'd love to hear your perspective on this as well.
Well, this is a very important message, and I think it's a message for all Australians. For those on the call, if you go onto the WiseTech website and read our credo, I think it's a starting point to think about how people should think about innovation and building a business. But everybody in Australia should be part of this journey. We need more technology companies. We need more innovators. We need more software developers. We need more technically skilled people. It's such an incredible profession. To be a software engineer, to be able to create technology, to be able to manage that technology and do things. We need to really focus right across the world right across the Australian economy on the technology business. And what that's going to do for us and do for the Australian economy is just enormous. But I agree with everything that Anthony said. It's just that we can all experience this if we start somewhere and keep working towards improving ourselves and learning more about the world we live in a technology sense, and using technology to solve, you know, complicated problems that can't really be solved other than with technology. I just think we've got a culture that has, you know, we all know about the tall poppy syndrome, and that's an endemic problem in Australia and a bad thing to have. And we all know about the fact that we think that we're originally, you know, we were living off the sheep's back, and now more recently it's mining and service economies. But the technology industry in Australia and worldwide has done better practically than almost any other industry in COVID and before COVID. And we need to recognize that it's going to be much bigger in the future, and we're going to need more people in that industry to help that industry grow. And Australia can go from, I think it's 20th in the world ranking now, we get to top 5 just by focusing on our education system and our attitude towards innovation and bringing people up, and a bit more risk taking on behalf of, you know, people coming out of school and university.
Couldn't agree with you more, Richard. And like both of you, I'm a huge advocate for entrepreneurship and innovation. And it's particularly painful on the one hand to look at the latest Bloomberg survey, a Bloomberg table, where Australia ranks 20th in the world on the list of most innovative nations. And on the one hand, you might say, look, that doesn't really matter. It doesn't really matter how the list is compiled and whatever the methodology is. But it certainly caused me, to sit down and do a bit of thinking around what is it about Australia that works really well, and what is it about Australia that provides a little bit of resistance or delivers a little bit of resistance to that culture of innovation and entrepreneurship. And I'd love to get sort of your thoughts, Richard, maybe to start with, as to what do you think Australia is doing really great to encourage entrepreneurship and innovation, and what do you think is missing at the moment? Where do we need to lift the game?
So I'm not critical about Australia. I think we do many things quite well. And we've got a great economy, we've got an excellent system of laws, we've got a stable culture. We are not in any shape in a problem as a country that we can't solve ourselves. But we have a huge advantage because we're a challenger economy. We're not the best in the world. We're not the greatest. We don't go around bragging about how good we are. We have a certain respect of being a challenger. And being a challenger actually gives you real innovators. If you are a challenger, you are prepared to try things. You know that you're not the best and you need to work harder. And yes, we can do better in our education system, particularly around technology education, particularly earlier on in high school and even primary school. And we can do more to encourage our children to be smarter technologists and to get with careers of the future. And the industries we should be bringing back to Australia are the technology creative industries, really, not the old manufacturing industries. But not being critical, but just saying we can do so much better by really creating a culture of innovation, a culture of being able to try things and being able to accept that whilst Australia isn't the best in the world, we've got enormous amounts of capability to be able to tap into. And that challenger mindset actually is an advantage. I told you before that we were successfully able to penetrate many markets in the world because people didn't think we could possibly be the successful company that we are because we were Australian. It's almost like we had stealth mode turned on the whole time. And we're now substantially larger than our competitors and very successful in these global markets we're in. But we always viewed that we could do better. We always thought we're not done yet. We can do better. We can be better. We can grow faster. We can be more profitable. We can have better products. We can go to market better. And we constantly think about being better, not being the best. Being the best is an end state, not a journey. And we want to be on a journey to be better, better, better all the time.
100%, agreed. Anthony, what would you say on that? Sort of on that topic. How do we, again, not necessarily climb in the rankings, but really how do we continue building on some of the amazing foundations that you guys, are laying for really the next generation and generations after of entrepreneurs who are focused on innovating and building.
Yeah, I agree 100% with Richard's comments. I think we've got all the right ingredients. The other thing I'd say as part of that is that, the talent in Australia is awesome. It doesn't have all the avenues necessarily to reflect itself, but, as a proudly Australian company, that I think it's fair to say we're the first consumer platform, for example, that's gone to the United States rather than the US coming to Australia. And it is very much a David and Goliath sort of equation, as we first looked at it. And we've continued with that spirit, that mentality, that entrepreneurialism that comes with that, because it is pretty energizing. And you see some incredible Australian talent that's joined Afterpay, very early on, and pound for pound against folks in Silicon Valley and other parts of the world, they are truly awesome. And it is great to see that. And it's a reflection of the fact that I think all the ingredients are there. The other reflection I'd sort of make about where to from here is, Australia is a small market in terms of its absolute size. So for technology businesses, the global application, the global marketplace is really the relevant concept for a lot of businesses to take flight. The really awesome thing too about technology and platforms is that they are borderless. So the possibility is there to have export industries in this regard. But of course, it's always a little bit harder to do that in practice rather than say just technology can go anywhere. So I think the more we can do culturally, socially, but also politically in relation to expanding the possibilities for companies to go overseas, integrate overseas, have really good talent come to Australia, as well as Australian talent proliferating around the world, are all really important things. And I think, as we said before, the ingredients are there. So, you know, there's further ways to go, but, you know, in the last year or two also, you've seen the government becoming a lot more active around what are those ingredients around things like fintech and other parts of the technology industry that unshackles the abilities for companies to try new things and take a place on a global stage. And, you know, I think the more, as Richard said, culturally, we can embrace that, the better. A lot of this is around a mindset that creates momentum. So we're not from a standing start, but the more we can infuse those two things together, I can see a huge amount of potential for Australia to have technology as an export industry.
I couldn't agree more, and indeed, what an exciting future ahead really for the industry. And in that context, I just find it fascinating to see that the technology sector in Australia is only accounting currently for 4.4% of the ASX 200. We obviously are not able to you know, to stare into crystal balls, but if I compare it to the material sector, which is accounting for over 20% you know, of the Australian market, it almost you know, sort of begs the question, of course, you know, are things going to flip in the future, or what is the future going to look like? Obviously, we're not necessarily into crystal ball gazing here, but how do you, what sort of, if you were put on the spot as I'm putting you now and asking to try to quantify, at least at a high level, how much more is technology going to represent in the portfolios of an average investor? What would be your guess?
Oh, look, it's hard to throw out a number, but maybe if I can dodge that a little bit, but I think it should compound from here. And there's two reasons for that. One is I think that there's new models proliferating all the time. And I think technology is unlocking new business models. You're absolutely seeing that from a fintech point of view, but you're seeing it in a whole lot of other industries that relate back to consumers or merchants or sort of key stakeholders in an economy. So you've got new business models emerging. Also, you've got every single traditional business in the world applying technology in a way where it's consuming more and more of their workflow and their work practices. So every business is a technology business to some extent, but to the extent that you know, most industries in the world now are increasing their technology spend. They're increasing their reliance on, you know, more innovative systems and processes in a way. I think you've got those compounding effects. If I look at, you know, the amazing trajectory of WiseTech and what Rich has been able to achieve over many years, it's really been about monetizing, you know, entire value chains and parts of the economy. So I see that continuing, but I also see these new business models emerging. So there should be a compound impact upon that, and it should represent a much greater percentage overall. Whether that's 20% or 30% in however many years, I can't say, but it certainly will compound relative to other industries.
That's great. Just switching gears for a second, if I may, we've got in the next session, after this one, we've got two of the most prominent Australian venture capitalists, Paul Bassett and Daniel Petrie, sort of joining us. We're seeing a lot of listings on the ASX of technology companies, which is very exciting. Yet at the same time, we're seeing record dollars being raised for venture capital funds, both in Australia and in Silicon Valley and in other places around the world. And we've certainly seen US investors more than willing, to back, Australian innovators and technology companies. Anthony, you were listed reasonably early in the journey, and a lot of your success as a company has really been shared with tens of thousands, hundreds of thousands of Australian investors. What is your perspective on the pros and cons of venture capital as a source of funding for an earlier stage, technology and startup sort of business relative to, to being listed on the ASX?
Yeah. Look, there's lots of pros and cons, but I think it also has to really relate to what stage you're at. And, to be frank, how many alternatives are out there, Alex? I felt it was very difficult for us as a very new company to be public. We didn't sort of make the decision lightly. Having spent a lot of my life with public companies, etc., that actually there were going to be a lot of challenges to scale, to innovate, to explain what you were doing while you were experimenting. But the fact of the matter was, at the time that we went public about 4.5, 5 years ago, the level of venture capital in Australia wasn't as great as it is today. I think it's increased remarkably in the last 2, 3, 4 years. So, we actually didn't have the option, to be frank, like I think we would have had today. And when you see Paul Bassett and Square Peg and his team do so much really with companies now at a groundbreaking level and in the early part of their maturity, they're really providing incredible options just to grow a little bit and incubate businesses to extent that they may be ready to go public, or actually hold off for a little bit longer. I wouldn't change anything. I think everything has its own case to it and its own circumstance to it. For as many of the cons, there were pros that went along with our journey, particularly of being public early. But I do think it's fantastic to see how much capital has come in to the venture capital private equity area for technology type businesses, and amazing people leading these venture capital businesses that have had real experiences, because I think if they can apply that context to some startup businesses, they'll be much better for it. And in a lot of ways, it would have been good, I think, in our perspective, to have had more choice at the time. But that's where our path led us, and we have no regrets.
That's great. That's a fantastic take, Anthony. And Richard, what would you say? Do you think, sort of what's your perspective on the VC versus listed?
See, this is an ecosystem that we needed to develop, and it's been flourishing in recent years. And I think there's a layering of all of these features. Private investment from friends and family, private investors generally. Then you've got VC, and then private equity, and then you've got the listed markets. This is a system, and we had limited parts of that system in Australia 10 years ago, 15 years ago. Today we have very vibrant system. Paul Bassett, of course, Square Peg, fantastic job they're doing to bring this forward. I know Daniel Petrie from a long time ago when I met him at Microsoft. All of us been around the economy for a long time, but this is a heyday of the world that we're living in, and in this technology space. And the index itself the All Tech Index, and what you're doing with the ETF. These are things that are all maturities of an ecosystem, and there's a place for everybody if they have the right business, the right motivations, and the right attitude and business acumen. They're going to find a place in that ecosystem that can scale up from there. So, you know, I took probably 15 years to decide to go to a public market from the first time that people said you should list, and probably really 10 years in earnest thinking about when would be right to go. But you know, businesses have to mature so that they can fit into those ecosystems. So you can't go and get money and then go and invent something. You've got to invent something first and then go and get money. You've got to build a business before you can get good investors. And the ecosystem is better than ever, but it can still be a lot better. And to that point that Anthony was making before about and you're making about the size of this, I don't know how big the tech industry is going to be in 10 years' time, but it's going to be a lot bigger than what it is today. It's going to continue its growth. It's going to permeate everything in the world. Every business will have more technology than they've had today. And the growth in that will be faster, in my view, than any other industry, any other sector, because technology will be permeating everything.
That's excellent, and really, really interesting take on things. And that really takes me, you know, to my last question. Just mindful of time. You're both incredible founders, very interesting people, and have obviously built, you know, phenomenal businesses. Founder-led companies are a special breed, and you know, both of you, Richard and Anthony, personify. You know, sort of what's so great about founder-led businesses. At the same time, succession planning is something that's important. You know, the bigger the business is, because you've got more customers, you've got more shareholders, and you've got, you know, incredible teams that you talked about before. When do you start thinking about succession? Is succession something that you started thinking about as soon as you've launched the business, basically, and have got some runs on the board? And when is the right time, and when is maybe too late?
Look, succession is an important thing for a public company, particularly as it gets larger. And I obviously have a very strong board, and I have a very strong management team. In recent years, we've been really working hard on building what they call bench strength. And ultimately, there should be no business where there is a single person that controls the destiny of that company. A founder is a very passionate person. They're very skilled because they've been around for a long time, and they're slightly mad because who would do this unless you're slightly crazy. But that doesn't mean that you can't have a succession plan and you can't find talented people and surround yourself by talented people and build a model where increasingly you become an important but not fundamental part of the business. And that's what we should all do. We should all be finding a way of making ourselves redundant in the very long term.
Fantastic. Anthony, what's your take on this?
Yeah, well, I think it's a really important topic. I think it goes into so many different areas. I'm fortunate I've got a very young and amazingly capable co-founder and partner. But, you know, succession, to Richard's point, is much broader than two people. It's much broader than founders. You know, it's a funny thing when you think about succession when you are a founder. You put so much love into what you're doing. It sort of becomes a little bit like your family. So in a lot of ways, you know, the team aspect to what we do is just, it's everything. It's so important. The people around our table, the people who also give an incredible amount of their own lives because they've brought in, you know, the continuation of this thing as part of their identity, part of their passion, is amazing. So when you've come from that place, it's almost like, you know, in your own family, you're never going to live the life of your child, but you want to see your child flourish, and you want to see them do things for themselves, and you just want to see it grow. And I think if you can take that feeling that, you know, very intrinsic desire in terms of how you speak to your team every day, but also how boards and others think around succession, then it sort of gives itself a little bit more of a natural runway. The trick is, in a lot of ways, to me, is just building the best team in the world. And if you can just pursue that path doggedly, then it sort of finds, I think, a really neat way to think about things like succession and continuity.
Yeah, look, that's really well said, and a great point for us to finish up on. Thank you both so much for your great insights. You know, for the stories, for the words of wisdom. I found the conversation absolutely fascinating, as I'm sure all of our viewers have as well. Unfortunately, that is all we have time for today. To everybody watching, please do not go away. We will take a short break before our third and final session for the day. Next joining us will be Ilan Israelstam, co-founder of BetaShares, head of strategy and marketing for the business. He's hosting a very impressive lineup of some of the most exciting and talented entrepreneurs and VC investors in Australia. The panel will talk about and explore a little bit more detail around the Australian technology scene. We'll talk about the environment for venture capital. We'll talk about what it takes to make a transition from a really promising startup to a real business and a successful tech business. Ilan will be joined on the entrepreneur side by some very impressive founders and CEOs, Tim Fung from Airtasker, Manuri Gunawardena from Health Match, and Nathan Walsh from Athena Home Loans. And on the venture capital side, we'll have some great people joining us as well. We have Paul Bassett as the co-founder and partner of Square Peg Capital, and Daniel Petrie, who's founder and partner of Airtree Ventures. So we'll take a short break, but please do not go away.
Hi all, and thanks again for joining us. I hope you're as inspired as I was by those excellent two amazing Australian success stories. Hopefully you enjoyed that, and I'll introduce myself. My name is Ilan. I'm a co-founder and head of strategy at BetaShares. So we've just heard and been inspired from two of Australia's most successful listed technology CEOs. So what we thought we'd do for this final panel is take it to the private markets, talk to a group of panelists whose primary goal is to operate in the primary market, the private markets, as a way to really dig into the Australian technology scene and the future of that scene. So what we want to do in this panel is to discuss the state of the technology scene, the environment for venture capital, what it takes to transition from a very successful small business to a very successful large business, and then ultimately to a very successful global business. And I've got some incredible panelists that I really feel so humbled to be here with. Dynamic, diverse, and all technology entrepreneurs in their own right. Each one of them is a true leader in their field, and they've either built or are in the process of building truly globally relevant businesses. So I've been personally inspired by each one of these great panelists, and I'm sure you will be too. So let's talk to our panelists and meet them. Starting with Daniel Petrie on the very left-hand side there. I feel Daniel is the elder statesman, I would say, of the venture capital industry. One of Australia's best.
Given I'm so young, that's amazing.
One of Australia's best known and most successful venture capitalists. History of, I believe it's 30 years, but you just said 40 years, so I'll say 30 to 40 years. He's a founding partner at Airtree Ventures, which is one of Australia's largest VC companies. We've raised approximately $600 million over 3 funds, and I know it's counting up a bit more. Prior to founding Airtree, Daniel founded the largest, one of Australia's largest internet technology investment companies, eCorp, as well as Netus, which is one of the early VCs in Australia. And prior to this, he held several senior executive roles with Microsoft, including reporting directly to Bill Gates himself and running the Asia-Pacific operations of Microsoft. And if that's not enough, Daniel's heavily involved in philanthropic endeavors through his Petrie Foundation, as well as being an adjunct professor at the University of Sydney School of Business. He received the Order of Australia in 2005 for services to business and the community. So very much welcome to you, Daniel.
Thanks, Alan. Thank you very much.
I've got Paul Bassett as well over on screen. Unfortunately, Paul is in Melbourne and was not able to join us directly. Paul is the co-founder of the now $8 billion global online employment website Seek, and was the co-CEO there with his brother Andrew until 2011. After Seek, Paul went on to found the leading VC Square Peg Capital, a venture capital firm that invests in businesses in Australia, Israel, and Southeast Asia. And I believe they've made about 35 investments to date. They're also the first Australian VC to manage $1 billion in funds under management. with investments in success stories such as Airwallex and Canva, to name a few. Paul's also the commissioner, one of the commissioners of the AFL. So I'd like to welcome Paul to the panel. Thanks, Paul.
Hi, Alan. Thank you.
I've got Manuri Gunawadina. Manuri is literally a lifesaver. She's the founder and CEO of Health Match, a service that uses technology to match critically ill patients with those clinical trials. So they've got a mission to accelerate medical research, allowing those who need it faster and more efficient access to life-changing medication. Now, Manuri founded Health Match at the tender age of 23 in 2017, and she was actually on her way to literally becoming a brain surgeon. Health Match recently raised $6 million in capital and has secured a commercial multi-country deal, I believe, with Roche Pharmaceuticals, a Swiss pharmaceutical company, and amazingly now has 55,000 registered users and is putting about 1,200 people a month into clinical trials. So Manuri, I'm very happy to have you here. Thanks for coming.
Thanks for having me.
And now, interestingly as well, I'll also mention that Paul at Square Peg Capital is an investor in Manuri's business. So just wanted to mention that as well. And then over here is Tim Fung. Tim is probably the only panelist who has actually created a verb, and that is to airtask something. He is the co-founder of Airtasker, a marketplace that helps Australians make extra cash by completing tasks of all shapes and sizes. It was founded in 2012, and the company now has an online community of over 4 million members. 30,000 taskers, I believe, and over 120 employees. Airtasker actually raised $33 million in capital recently, and apart from Australia, is currently operating in the UK, Ireland, New Zealand, and Singapore. And prior to starting Airtasker, Tim worked in the talent management industry at Chic, and also spent 5 years as an investment banker at Macquarie Bank. Welcome, Tim.
Thanks for having me.
And finally, Nathan Walsh, the co-founder of Athena Home Loans, an innovative digital mortgage platform that basically helps Australians pay their home loans faster and own their home sooner. Founded in June 2017, Athena recently announced the $70 million capital raise, which I believe is the biggest ever Aussie-backed venture round. They also have announced recently they've actually originated approximately $1.5 billion in mortgages. Now, prior to founding Athena, Nathan was a GM of self-directed wealth at NAB, National Australia Bank, which included running and growing NAB Trade, their brokerage business, and has also held roles at Citigroup, Boston Consulting Group. And both Daniel and Paul's Square Peg are investors in Athena. Welcome, Nathan. So that's a great panel, and I'm so excited to spend some time with them talking about the future of Australian technology, what it means to be a founder, and what it is to be an investor. So I'm going to start with the venture capitalists, if that's okay. And given that you're not in the room, I might start with you, Paul. We've heard a lot in previous panels about the huge growth of the Australian listed market for Australian technology. But more broadly, why do you think the Australian technology industry is growing quite so fast? And can it go on? Will it continue in this way?
Yeah, look, it's been a really good 5 or 10 years for the technology ecosystem in Australia. And I think if you go back even 10 years or so, you had a relatively small number of startups that have become globally successful, globally relevant businesses. You weren't getting enough of the most amazing talent going in the direction of startups. You had relatively little capital supporting those businesses, and certainly not businesses that were kind of really providing the sort of the large volumes of capital required by businesses to grow. And so we've seen a really significant increase, in the number of very, very exciting startups that have gone on the sort of the journey over the last few years.
Yeah, fantastic. Well, look, I'll ask Daniel the same question. Essentially, the question was, Australian technology industry is growing so rapidly. Why and can it last?
I couldn't actually hear Paul's answer, so this could be repetitive, which is either very useful or not for people listening in. Yes. Look, I think it can last. And the underlying thing is that technology is changing every job in every industry, and that's not changing anytime soon. In fact, more technology is becoming more and more important to every job in every industry. So the impact of technology is increasing. Whether Australia plays a role in that or not is a function of us creating great startups like the ones here and funding those startups. The good news there is that the cost of a startup has come down dramatically, and so there are more startups than ever before, and there's more and more money coming into the sector as a function of both investors looking for high growth outside of other areas, and they've found it hard to find in equities and other areas up till now. And I think investors seeing that, hey, technology is a real thing, and it is continuing on. And you only need to look overseas at some of the success stories, or even locally to people like Atlassian or Canva now, who've grown significant sustainable global businesses. This is not going anywhere fast. This is happening.
And is just staying with you for a minute there, Daniel, you've obviously spent a lot of time overseas investing and being over there. How does our technology industry differ in your view from the rest of the world? Are there particular sectors or industries where you believe Australia could be globally relevant or is globally relevant? And yeah, what's the difference?
Well, I think obviously scale. I think, you know, we're coming into this from a low base in terms of the size of the pro rata, obviously, the size of entrepreneur community, the size of the capital base, and the size of the experience base. Having said that, look at some of the underlying skill sets. Australia produces outstanding software developers. We as good as anywhere in the world, if not better than most places in the world. So we have a natural talent pool of outstanding engineers to start with. We also have very, very strong entrepreneurs, as you see on this panel here, people who have strong domain experience, strong skills, and can apply that. So that puts us as good as anywhere in the world, quite frankly. There's no, now, should we play in areas more so than not? Not necessarily. I think the one area I would say we have probably a slight natural advantage is in health, in medical, mainly because we're one of a few countries that has a very large data set across all hospital and doctor visits, being the Medicare data set with the PBS data set. So not a lot of countries have nationalized medicine. UK does, Canada, Australia. So I think that gives us a data pool that can then feed into an industry. But generally speaking, no, we can play in any market. You look at what we're doing in fintech, you look at what we're doing in the health environment, look at what Airtasker is doing. It's as good as anywhere else in the world.
Yeah, fantastic. Paul, I'll stay with you on that question as well. I know you spend a whole lot of time over in Israel and Southeast Asia with SquarePeg. Same question, which is, you know, what particular industries are we potentially better at than others? Is there something different about Australian technology industry versus those? How would you talk through the differences?
Yeah, look, there's a couple of things. I think if you go back a little while and talk about where we came from, you know, a couple of our challenges were, I don't think enough, going back 10 years or so, I think too many of the best and brightest people in Australia were going into, you know, into investment banking, management consulting, law, accounting, the professions more broadly. And so that's been a really huge change for us, I think, in the last 10 years. And you see that on the stage today. So many of the most talented people in Australia are either starting companies or joining early stage businesses, is the first thing. Secondly, I think that, you know, increasingly people are going after really, really large markets, and particularly going after global opportunities rather than just local opportunities. In some cases, local is going to beat global, and I think that's probably particularly true in a lot of areas of financial services, like Nathan's doing with Athena. But in many, many markets, global is, you know, you need to pursue global opportunities. And so that's been a really, really big change in Australia. If you go back 15, 20, 25 years, you know, we had a strength in marketplace businesses. In the last 5 or 10 years, I think we've been very, very strong in SaaS businesses. But as Daniel mentioned, we're great in health, and I think financial services is the other area. And you see that with Athena as an example, Air Wallets, another example. Australia has a lot of talent in financial services. It's a very large market. We have a very, very large pool of savings. We have a strong regulatory environment, a lot of talent. So we've got a lot of the ingredients to build very, very successful businesses in financial services.
Yeah, that's great. Thank you so much. Yeah, sounds like the panelists are basically saying that even though there are specific areas of interest and areas where we might be better placed, we should be able to be as good as in any industry. All right, let's talk to the founders now. I'm going to start with you, Tim. I believe most people in our viewers here would have heard of Airtasker, but maybe just give the story of the background of the business. What was the reason behind launching it, and tell us a bit about your story.
So Airtasker is a marketplace for local services. We connect people who need work done with people who want to work. And I describe Airtasker as being open, horizontal, and a transactional marketplace. We're horizontal in the sense that you can get anything done on Airtasker. Where it started out was I was actually moving apartments, and I asked a friend to come and help me move because he has a chicken nuggets business, and he does weekend deliveries using a truck. So I asked him, you know, can you come and help me move using your truck? And that just got us thinking. It's like, why do we ask friends and family to do all of these kinds of jobs when there's underemployment, there's unemployment, and people out there want to be able to earn a living? And we thought, there isn't really a fit for purpose platform that exists for this. There's either on one hand, platforms like Seek, where you do full-time work. There are also sort of classifieds and directory services, but there was nothing that was able to create trust and offer that simplistic system that you need to be able to unlock local commerce.
And I have to ask, because we've had that come through as one of the questions, what's some of the craziest tasks that have been posted?
We're seeing something like 7,000 or 8,000 tasks every day. So, internally, like our moderation team definitely takes a look every day and has a bit of a chuckle about, the long tail of things coming in. Some of the more memorable ones, I suppose, we've had is we had someone want to get walked down their wedding aisle with 2 stormtroopers by their side. They had like a whole Star Wars themed wedding. We've had Game of Thrones themed date nights. But during COVID, it's been really interesting as well, just to see the different ways people are using Airtasker creatively.
Yeah. Well, I absolutely want to make sure we talk about COVID. I think there's a couple of you who would have a lot to say about how it's affected your business. But I do want to ask Manuri a question. You are unique in the panel in the sense that you started this business when you were at university. You didn't finish your med degree, as I understand it, 23 years of age. So you went straight from being a university student into being an entrepreneur and a CEO. I'd like to just hear a little bit more about your story of starting the business and how it all went down.
Yeah, absolutely. So, I mean, I really had no work experience or real world experience outside of med school and internships. And I think, but what I did have is a real connection to seeing the problem that existed, which is oftentimes for patients, it's very difficult to access clinical trials, and it's dependent on which clinician they're visiting or which hospital site. So what I saw while working in a lab researching brain cancer, we were running a clinical trial, was only 2 people in all of Australia got access to this study. And so on the other side, what we saw was drug development was seeing significant delays because operationally they couldn't access enough patients to go into trials. So that's how HealthMatch came about. And we launched it at the end of January 2019 and have seen some great growth this year and really seen the platform take off.
So has COVID actually been, an impetus or catalyst for further growth in your opinion, or was it sort of you're on the right track anyway? I
think to a degree, we were building out the team and focusing on growth, but also the industry is now really taking up digital health and utilizing tools like ours to operate in environments that are difficult like today. Right. Fantastic. All right. Well, I'll turn over to Nathan now as our final founder. I recently read an article that the market cap of the 4 largest US listed fintechs, so that includes Square and PayPal, are actually now larger than the big 6 US banks, including JP Morgan, Goldman Sachs. Pretty astonishing figure. But there's no doubt that Australia, so fintech's growing gangbusters, but Australia has got a very entrenched banking system, and mortgages are the jewel in the crown of banks. How are you able to disrupt and take share away from these huge gargantuan institutions? And how do you think about competing in that sort of environment?
Yeah, so my co-founder Mike Starkey and I actually came from the large banks. So we spent a decade working in one of the big local banks and then offshore as well, and really saw an opportunity where financial services has been a technology-intensive business for a long time, but the pace of disruption that's happening, simply put, legacy players are not really well set up to deal with the pace of change. So there's an opportunity around how do you go and simplify? You don't have branches and bankers and all those other components, so you can pass on savings to customers as better rates. This world we're moving from intermediaries like mortgage brokers sort of owning the market to digital really growing quickly, and legacy players often not well set up for those components. But frankly, also just the frustration that so many mortgage borrowers have. Australia housing debt to income is some of the highest in the world, but not really thinking through how do we actually help customers achieve those goals, actually help them pay off home loans faster. So we see an opportunity as a disruptor to be using technology to actually achieve those goals of efficiency, scalable digital distribution, actually better meeting the needs set of mortgage borrowers.
So technology seems like it plays a pretty pivotal part essentially in the whole experience. Is there anything else?
Well, I think it is absolutely great engineering and great teams, but a big part of that is actually how do you organise all your business around those to take advantage of those opportunities. So in many cases, large legacy players almost talk about tech as being the handbrake. Actually, once you get to the point where you're using efficient processes, you've got your innovate to operate ratio of right, actually it then falls back to how is product and design and service and risk and all those teams working, so you can actually be really taking advantage of the opportunities being presented.
Yeah, right. Fantastic. Well, look, I'm going to ask the question now of all the founders, and for that matter, any VCs who themselves have been launching businesses over the years. What are some of the lessons you'd like to talk about in terms of launching a technology business? I'm sure there's a lot of budding entrepreneurs out there, no doubt. I would love to hear from you on that topic. Who would like to go? Manur, would you like to?
Yeah, sure. I mean, for us, what we've learned is, technology is so dynamic, so don't wait till it's perfect to launch. Start, testing your market and iterating as you go. And I think that's a great thing about tech is you can bring in the data and learn and sort of change as you go. And that's been an advantage of, building a technology business for us.
Jim, anything you'd like to add?
Well, I was just talking to Manuri before about the hierarchy of needs, for a startup. And I think, we often talk about things like culture and scale and, some of these bigger picture things. And I think they're important to have as North Stars. But I think acknowledging staging and where you're at in the process, I think is really important. At the beginning, the idea does matter. And then I think the execution matters and the growth matters. And at a certain point, getting it right with scale and culture is going to matter too. But I think acknowledging where you're at in the journey is a really important thing to do.
Yeah, right. Paul, I'll bring you in obviously because I know that you're out of the picture here in terms of being here in the studio. You would have seen a lot of technology founders fail and prosper. What do you think? What's a piece of advice you would give in that respect?
Point is getting the foundations right. I mean, you can change a lot in an early stage company. They're pretty nimble. You can change a lot of things, but you sort of can't change a founding story. And so that's about, what is the problem that you're solving, how you actually came to that problem, the sort of the story of discovering that problem, the story of identifying that you and a small group of people could actually solve that problem better than anyone else could. Who are your co-founders? What do you each bring to the table? Are you aligned in terms of the vision that you're trying to achieve for the business? Are you aligned in terms of the values? Getting those things right are so unbelievably important because, as I said, you can't change them. And they're the important elements to make sure you get right as the foundations for building a business.
Yeah, fantastic. Look, one thing I wanted to ask the panel as well, in particular the founders at this point, is that thing about being an Australian technology company. So what has been particularly either good about that in terms of launching the business here and what has been a bit hard about that?
I'm happy to
go for it, Tim.
Crack at that. I think, so let's start with some of the things that are a little bit more difficult. I think certainly for Airtasker as a local technology platform, primarily with local Australian customers, it made it very hard to raise money from international investors. So I think at the early stages, that was absolutely fine. At later stages, given the state of the venture capital market over the last sort of 10 years, that was definitely a difficult thing, i.e., raising money in, say, the US is very difficult with an Australian-based business. On the flip side, what's been really good for us is that building a marketplace and a local marketplace in a smaller country has actually enabled us to, be able to build up a good network effect in the local areas. And that's been, a powerful part of our marketplace.
I might just switch to Daniel there. That question about late stage venture capital comes up quite a bit. Tim has mentioned now that may have been some time ago, but what do you think about the ability for someone like a Tim to raise a bigger round in the Australian environment today?
I think the Australian venture capital market is very different to what it was even 3 or 4 years ago, let alone 10 years ago. I think if you've got a strong idea, whether you're at the late seed or you're in the later stage, you can raise the money. And not only from Australian VC firms. What we've seen, which I think is very useful for the Australian economy, is that a lot of American firms are now coming here and are happy to invest in Australian-only companies as well. The old idea that it had to be global day one, that's really changed now to being, can this business be a substantial business? I mean, Athena is an Australian-based business, and it will even if it only ever stays Australian, it's going to be a huge business. So I don't think any investor have any issue with the opportunity that Athena provides. Now, we can see that, and many of our compatriots in the VC community can see that, but so can American VC firms. And a lot of American VC money is seeing that the US market's a bit overfished and valuations have gone a bit nuts in some areas, so that we're seeing a lot more. In the old days, a VC firm from the US wouldn't come here unless they could write a $20, $30, $40 million check. We're now seeing them in the market writing $3 and $4 million checks. So it's a completely different world.
And are they more than happy to co-invest alongside Australian VCs?
Absolutely, and often they want to. They want to see someone who's closer to the market and so they are looking for partners. And we always, whenever we do a round in a company, we always look to bring in another venture partner in, whether it's an Australian or overseas, balance of perspectives, balance of opportunities.
Yeah, right. All right, so same question for you, for either Manuri or you, Nathan, on the Australian side of things.
Yeah, so look, I would very much agree. I think the access to capital, so we've been going with Australian investors all the way through, and I think at each stage of the journey, that hasn't been the constraint. If you've got a very clear and crisp story about, why this, why now, why you, if you've got clear and strong answers to those questions, finance won't be the issue. And so we actually think, peeling back, really the question behind the question for finance is talent. How do you actually make sure that you're attracting the right set of team members, the right focus, the right advisors, the right support? Because ultimately, there's lots of great ideas. It becomes a story around how are you the team, to actually go and execute on that. And so that's really, I think, talent first is sort of the question around, at each stage of the journey, how do you show you've both got what you've assembled today, and then what's the evolution of where you want to be at each stage going along the way?
I think the one area that, if you look at talent, as I mentioned earlier, and I think Paul may have amplified, you look at developers, Australia's got as good, high quality number of developers as anywhere else in the world. I think the one area probably two areas we lack, but one specifically is product management. Now, generally speaking, product management comes out of developers who grow up in development and then pass off to go into product management. This is not marketing, this is product management. We just don't have a large enough community of true high quality product managers in Australia. That is an issue. It will change as the Atlassians and the Canvas and the Airtasker and the Athenas all grow and become substantial. But today that is a real lacking, and so there is an argument for us to be able to bring in some overseas talent, particularly in product management, and I'd say a little bit also in growth. It is hard to find senior growth people with a lot of experience. Again, it's just the time horizon. So generally speaking, we've got a good talent pool, but we could always sort of add to it, particularly in product and high-end growth.
And Manuri, what about you?
Yeah, I mean,
Afterpay is launching a globally relevant startup here in Australia.
Yeah, I mean, capital has been I guess in the last couple of years, there's definitely been more capital in the ecosystem. So raising hasn't necessarily been the biggest challenge, but I think on the point of hiring and building a team, product and growth, I completely agree. We're going through a phase of like building out a team and finding people who've done it before, who's scaled companies and whose experience you can lean on is a little bit challenging. So I think the good thing though is we've seen a few Australians who've worked in the Valley or in the US returning home.
Yes.
So that's been helpful.
Interesting. And Paul, I just wanted to get you in on this conversation as well. The challenges about being an Australian business, and what it sounds like what we're hearing from the panel is that product in particular and growth area are the two areas where there seems to be a bit of a dearth of talent. I know previously it was engineering, so I'm really glad to hear that's changed. It sounds like it absolutely has. I remember it was the first thing everyone used to mention. Now it seems to be product and growth. Do you concur? And what's your view on sort of building a world-class business here in Australia?
Yeah, look, I think talent's a challenge, full stop. And truthfully, finding great people for high growth companies is a challenge all over the world because there's more demand for those folks than supply. But I think Daniel's right, particularly on product management, that's always been a challenge because, product management is a very specific discipline and it's a really, really hard and incredibly important skill in a high growth early stage tech company because it kind of brings the entire organization together. The marketing organization, the sales organization, the engineering organization, etc. So certainly important. Look, I would say there are challenges of building a startup in Australia, but they kind of become much more, the pros and cons, I think, sort of net themselves out a lot more. And it varies a little bit more market by market. Traditionally, it's been very hard to build an enterprise sales organization from Australia. Atlassian succeeded by having a completely bottom-up sales approach without any salespeople in their organization, and that kind of was a really incredibly brilliant way of overcoming that challenge. And they sort of pioneered a go-to-market strategy that's now used globally. But even with sort of top-down enterprise sales models, which are typically the hardest to build from Australia, COVID's been a real accelerant for acceptance that things can be done over Zoom. You don't have to meet face-to-face. You can do it from Australia. You can have distributed teams. So sure, there are some challenges to building a startup in Australia. We probably don't have that incredible critical mass of just that high concentration of amazing talent you get in the Bay Area. You get in Israel. Those informal conversations that happen. Those incredibly strong networks. The ability to bring people into your organization very, very quickly. But by and large, there is no reason why you can't build a world-class organisation from Melbourne or from Sydney or from Townsville or really from anywhere in Australia. And that's been the really, really big change in the last 5 or 10 years, not just here, but globally, which is a very, very exciting phenomenon.
That's excellent. Well, look, I know it sounds like a lot of the barriers of launching an Australian technology company seem to be on their way to being less important than before, and it seems like we've absolutely managed to nail the engineering talent issue, which means that I have to ask the question, you know, our ETF tracks Australian technology companies that are listed. So I'm going to ask the three founders in the room, is an ASX listing on the cards for any of you? I'm sure the ASX would love to have any three of your companies there on the boards. Yeah. You want to start?
I think these are always a question about, you know, when is the right time to go public. I think we're in, you know, to some extent blessed by there's plenty of money to support private investment, and so it's less a question of you need to go public for access to capital. There's plenty of access to capital. So I think it does become a question around what's the right point of the maturity for a company to go private. And I think there's clearly risks of IPOing too early. So, you know, I would say we believe we're a business that long-term public capital is very well suited for what we do, but that's not a near-term piece. I think we've got lots of opportunities to grow with our current capital structure.
There is a danger. I think, you know, Australia went through a period where the quality of technology listings was, you know, not great. That's changed somewhat. There are some high-quality technology companies now listed in Australia, but we are at a point we've got to be very, very careful we don't fall back into a situation where companies who are subscale list, or they can't raise any private money and they try and get some money from less sophisticated investors on the ASX. So, you know, there's no reason Australia couldn't be a very significant technology index, but it's not clear that that's necessarily where it's going. I think Nathan's point is incredibly valid, that it's about when are you ready for public? When is your company ready to go public in terms of its ability to forecast future revenues, in terms of deal with the governance issues required, the reporting issues. And we're seeing probably a shift too much back to the bit of the bad old days where a random idea gets listed on the ASX, which doesn't seem a particularly good idea.
Yeah, interesting. And how about yourself, Tim? You're probably the closest to being able to think about this situation at the moment, from what I understand. How do you feel about it?
Yeah, so first of all, you know, we're in that strong position now where, you know, we're profitable and cash flow positive on a monthly basis. So no rush to do that. That said, for us in terms of exit, we do think that you know, it's important for some of our early shareholders, and if we wanted to go down that route, we'd want to do it in a way where Airtasker can be independent and pushing its own mission, and so not looking for trade sales or exits like that. I think that what Daniel was mentioning about like the staging is really interesting too. I think that, yeah, there's definitely a period on the ASX where there are some smaller subscale businesses that, you know, probably shouldn't have been listed on the ASX. On the other hand, it's really interesting to see in the US, you know, you've got some of these private companies that are sort of $30 billion market caps, which, you know, the public can't get access to and don't have the transparency, you know, associated with those businesses. So I guess it's just a balancing somewhere between those two ends of the spectrum.
And how about you, Manuri?
I mean, we're very early on in our journey, so I think it's really focusing on growth and building a great business for the next, you know, however many years, and in due course, when we get to the scale that we want to, it's something we definitely keep ears open for.
Yeah, great. Okay. Well, I'm going to go back to the VC team for a little bit here, and one thing that we always hear time and time again is how important the team is.
So just on that, it's an interesting point about the listing. I think one of the things we have to sort of fix in the Australian market is the analysis of technology companies, because, you know, you've got inherent liquidity issue anyway, because the ASX is smaller than the NASDAQ, and that can be overcome if there's quality research being done on the sector. And what you find in the Australian technology sector is below a certain sort of enterprise value, no one's doing proper research. So I think we do need to fix that part of the pie where you have high quality research helping investors understand where the value sits, at least from their perspective, and that then fuels better liquidity and a better model. We don't have that mix quite right yet.
Yeah, it's fascinating. Okay. So yeah, I was going to ask the question about, no, of course, I was going to ask a question about VC investing, which again, I know is an area of significant interest to a lot of our viewers. And of course, backing the team always comes up as, you know, probably the most important thing. I'm going to try and get you and Paul to, in one single word, describe what you look for in a founder. And then I'll give you a few more words to answer the question as to what you look for in a business model. So I might start with you, Daniel.
Okay, I'll hyphenate it. I'll say informed ambition.
Okay. Can you slightly elaborate on that now that you
Sure. Look, I think you've got to have the ambition to solve a real problem. You know, this is a real problem that exists, but it's informed. You haven't just sort of woken up in the morning and thought, I think I might just go and do something around it. You've looked at the problem, you've looked at the competitors, you've looked at the opportunity, you understand to a certain level, what do I need to start to build, at least an MVP, that will give me some traction in the market that will show whether I'm actually solving that problem. So you have to have ambition, but ambition without this sort of sense of data and being informed and being a little more settled in the thinking, I think is dangerous, actually.
Okay. Well, I'll ask Paul the question too. That single word for what you look for in sort of entrepreneurial founders that you back.
If I'm forced to a single word, which I guess was the brief, it'd kind of be insight. And I think both Minori and Nathan, and to some extent, I obviously know less about Tim's story, but we've caught up many times, and he spoke about it again briefly today. But all three of them had a particular insight that wasn't generally available to sort of the community at large. And so the starting point is that they kind of understood a problem in a quite personal and a quite specific way, and then had the passion, the drive, the self-belief, the curiosity, the willingness to surround themselves with incredibly talented people, all the other things that come with that are necessary in order to then create a really, really successful business. And there's about 10 or 11 attributes we look at that we assess founders against. It is a highly subjective exercise. Resilience is another one. Kind of doing your life's work, which is, I guess, sort of relevant to that point about insight. But most, not all, but most amazing founders we meet kind of have this particular experience, a particular insight that leads them to solving this problem and becoming incredibly absorbed and focused on solving this specific problem.
And the second part of my question, Paul, I'll ask you to carry on with is the business model itself. You don't have to have one word for that, but what are some of the things you look for in the actual business model itself?
Look, I think the thing is the starting point is the problem. What's the problem being solved, and understanding the nature of the problem, and then the next point is how is that problem being solved, and what is the team doing that's kind of unique and differentiated. And if you think about it, whether I'm a consumer, whether I'm a small business, whether I'm a large business, to get me shift from using one particular product or service to another product or service, it's not a matter of being 3% better or 5% better or 10% better. In metaphorical terms, you need to be order of magnitude better than the incumbent way of doing things. And so really understanding the starting point is the founders having a deep understanding of the problem and solving in a way that is unique and differentiated. They have some unique insights, unique abilities to solve the problem, and that there are certain things that you can build behind you that create a real moat, that create real barriers to entry. Network effects, brand, distribution partnerships, technology, whatever that happens to be. And those elements are obviously really, really important.
Yeah, great. I might ask Daniel the same question. Did you give you a chance to ask on the business model itself? What anything you'd add to Paul's comments?
No, I think Paul covered it very well. I think the business model really just comes out of this sense of, can you look and see that this business or this product or this service has customers that really care, that just love the experience. And that if you're solving a problem that exists at scale and that the customers of that product or service love it, there's a business model there. The pricing will solve itself. I think you can get sometimes too caught up in trying to solve the unit economic model and all that sort of stuff and not understand more about the use case. If people really love it, I think that the Canberra experience that SquarePeg and Airtree and Blackbird have had is, in the early days, there was no revenue, but the users loved the product, and still do, love the product, and the usage rates and reuse rates are incredible. So you understood that. We have another business that we've just invested in, and the same thing. It's got no revenue, but the usage rates are incredible. So we know that people love it. You can then monetize that.
Okay. Now I'm going to stay with you before we move on to talk to the founders a bit more. You've recently come out in the press and said that the Australian technology and startup scene is, let me just read it here, a bit too full of itself.
Yeah.
Can you talk to that a bit?
Yeah, look, I think firstly, the Australian technology sector, as we think of it, is really 8 years old. It goes back to 2012. People forget what happened before, and first you think nothing happened. Well, things did happen, but and were successful. but really people think about that point on. And really since that point in time, there's been no wholesale failures. Everything's a success, everyone's doing super well, every business is fantastic. And yet that isn't true. In the venture capital world and the startup world, over the long period, there are more failures than successes. The successes, of course, outweigh the failures in terms of net dollars returned and jobs created. So what we have in Australia is this sort of bubble that everyone thinks they're a genius, everyone thinks they're the best investor in the world, they're the most informed person. And I think ambition is fantastic, and I think we all are ambitious in what we do. But what we lack a little bit in Australia is a bit of this sort of informed ambition, come to my earlier point, which is you sometimes often see venture capital investors who have read 4 blog posts and are now pontificating on their knowledge on deep space or lab-grown protein or whatever. And I find that a bit disconcerting and a bit disingenuous, because there are certain areas, take a Manuri's area, there's a lot of deep science and deep work going into how you think about health matching, and yet you see some investors who might approach it and go, well, we understand everything about matching clinical trials. So I think it's both founders and venture capitalists saying, hey, we have to prove out that we can do this for the benefit of our investors and superannuation in the case of retirees. Let's not take ourselves too seriously that we think we are geniuses. Let's prove that we know what we're doing by execution.
Yeah, right, okay. All right, well, I'm going to talk to the founders a little bit more about going global now. So Tim, Manuri, and Nathan more so domestically, but maybe starting with you, Manuri, you are embarking right now, I believe, on some pretty significant global expansion, or at least want to. How are you finding the transition from being an Aussie business to going global?
Look, I think being an Australian business, I think there's an advantage to going global. We started out in Australia, but it's a 25 million people population, so it's not a huge market. But the advantage is we're very close to Asia. I think as an Australian founder, you do think about expanding globally. So the way that you build product and processes from day one are to scale and are to enter other markets. And for us, we're looking at Singapore as our next market and entering Asia. So it's early days, but I think there are some advantages to the way that we've thought about the product and the business from day one.
Yeah, great. And Tim, of course, you are now officially in UK, Ireland, Singapore, New Zealand. So you are currently a global business. How have you found that experience of going global from here in Australia?
Well, I think it's really interesting for us because when we started going along this international journey, there wasn't like this clear sign like we were capping out in terms of total addressable market or anything like that. The services economy, in Australia is, tens and tens of billions of dollar opportunities. So, for us, it was a bit of a, when do we make this decision and what's going to prompt making that decision? So we've done that over the last couple of years to go and start setting up new marketplaces. And I think the unique challenge for us is that it is inherently a completely localized network effect that we're trying to build in each new market that we go to. And so it's actually been an interesting exercise where we've had to look at what got us to scale in Australia, but then go back and try to articulate what those what our thesis was for those early days of how we did that and try to repeat that time and time again in a more reliable and hopefully more efficient way.
Yeah, right. And now, Nathan, your business in many ways is a domestically focused business. Is that enough? Do you need to go global at some point, or are you planning on just taking over the banking sector here in Australia?
So I think, in financial services, it's really important to be crisp and clear about what is a local business and what's global. There's clearly parts of financial services, FX or trade finance or payments, which are very global. And if you're trying to play a local game in that sector, that would be a pretty dangerous model. We think that home loans is a very local business. There's very specific regulatory requirements and need set. And of course, it's a $2 trillion mortgage market here. So, happily getting, each incremental percent here is worth a lot more than trying to sort of expand out.
Yeah.
But we should sort of highlight, though, we're a double-sided business, so that we are local and will stay so on the borrower side. But on the funding side, home lending is actually a global business. And so we are working both with local funders, but also offshore investors as well. And so clearly when you're talking about how do you deliver great value home loans, well, a big part of that is having a great proposition for funders, delivering really high quality product to them, so you could be passing the benefits of low funding costs through to your borrowers. And so for a big part of this is really understanding what is attractive about the market here. We've got a great regulatory framework, the loss rates, all those other components in Australia mean that there's a very good proposition. And with quarter of the fixed income product around the world at negative interest rates to be able to get to, even at the low rates we're in the Australian market, it's still compelling for the right set of investors. So we'll always be thinking about a difference between a global stance for the funding side, but very focused on winning and being the best Aussie home lender on the borrower side.
Yeah, I think entrepreneurs out there, are often told, you have to be global from day one. I don't think that's true at all. And obviously, I think is a very good example, as is Airtasker. I think as is HealthMatch. They don't have to be. I think what you have to be is the best provider of that service in the world. So if you're doing Athena home loans, you want to know that you have the best CAC algorithms, the best way to monetize loans, the best way to retain them and shift them to the new loans of anyone in the world, but you don't have to necessarily move outside Australia. So I think, is the market big enough to support a large business which can become sustainable, and to use Paul's term, to have a moat around it, which means that if someone tries to come and get you from overseas, you have the best offering in market and you're at the scale where you can defend any approaches. But I think forcing entrepreneurs to have to think global, I think is wrong, because there are many markets in the health space in particular, there are very large businesses that could be just Australian based or could be Australian with some growth in other areas. But forcing them, education is another one where you can have very, very large businesses in Australia which are just focused on the Australian education system, and to force them to look overseas may in fact disrupt their development and make them less useful to the Australian market.
Yeah. Paul, any comments on going global from day one? Is that part of the square peg mantra, or?
It varies. Like all things, it's sort of situational. So I think first and foremost, the first question that we try to ask is this problem going to be solved globally or locally? And so, for example, if we go back to sort of the early days of the internet era, we actually had Australian search engines. We had ANZs, we had WebWombat. There was no way in the world that search was going to be one locally rather than globally. You needed massive scale. In technology in particular to kind of, to win the search business, and you were never going to have a local rather than global winner. There was no logic to being local. Music streaming, again, there's no real reason why a local player beats a global player. It's possible, but it's highly unlikely that a local player beats a global player, except in markets, in the case of music, where the music itself is very local and it's hard to drive the supply side. You need all these specific local relationships to drive the supply side. But in most markets, say in a market like Australia, that's not the case. Nathan talked about financial services, where again, in a lot of markets they're won globally, in a lot of markets they're won locally, and it's sort of understanding market by market. Then you've got a sort of another category of businesses, marketplace businesses, Tim's business, Minori's business, marketplace businesses. And again, it depends a little bit on how you get the supply side and the demand side. But if you kind of need to get the supply side and the demand side, but kind of through local marketing, local relationships, local partnerships, then again, sometimes they'll be won locally, sometimes they'll be won globally. But if you actually think about a business like Uber as an example, it is actually by and large a series of local businesses. They got the benefit of a scale in product and technology by expanding globally rather than locally. But it was basically a market by market battle, and they happened to win some. They won the Australian markets, but they lost others. They lost in Southeast Asia to Grab. They lost in China to Didi, of course. They lost in Russia. And so, it's really just about, there is a certain advantages, a certain scale bet as you go from market by market, but you do need to have a playbook that works in a market, whether you're an Airbnb, whether you're an Uber, or whether you're a HealthMatch. You have to have a market, you have to have a playbook that works, you have to have product market fit, and then you've got certain benefits as you expand market by market.
That's great. Well, look, I'm going to ask one more substantive question before we get on to what I call the quick fire round of questions. I'm actually going to do something different and not talk about COVID, because I think we've probably spoken about it enough. I'm actually interested to talk about the government and what the government could be doing to better foster our technology industry. So I'll open it to the floor. Who would like to talk about what the government could be doing to are they doing a good job, and what could they be doing better?
So I think land at the slaughter. I think if you go back to the Malcolm Turnbull era, the things he put in place with the innovation statement, with the ESB-CLP structures, were incredibly. We would not have an industry today, and probably a lot of these companies wouldn't exist today if it wasn't for that structure that brought investments in. I think very recently, David Coleman's work as Minister of Immigration in the global talent, he took what was a pretty broken thing, and now it's actually functioning quite well now. That if you're trying to hire someone over 150 grand a year from overseas, you can, if not, because you can prove out the skill set required. So I think that those two have been very good. I think, however, the narrative from the federal government is pretty unfortunate. I think the attack on the RDTI was just criminal. To go after software companies that are really the bedrock of innovation in this country and really rip out their heart by saying, give us all that money back, was just highly inappropriate. It's all to do with Frascati definitions, but it comes from a government position that I think doesn't understand software. If you look today at when you see the Prime Minister or the Minister of Industry talking, they equate innovation to advanced manufacturing. They want to be there in a high-vis vest and a cap pointing at some bit of robotics. And of course, advanced manufacturing is important in supply chain work, and we've seen that through COVID. And of course, there are opportunities, but the harsh reality is advanced manufacturing will create great wealth and not many jobs, because most advanced manufacturing plants are fully robotic. However, in the software world, there are vast thousands of jobs to be created in software, because software is in everything from a TV set to a microphone to a matching service to a home loan service. So I think the unfortunate situation we have now is that the government narrative seems to hate software, which sounds a ridiculous thing to say, but you just do not get anyone in government talking about how important the software sector or software skills or software companies are, and yet they are today the biggest generator of jobs in the economy today is software companies. So I think there's a real issue there around supporting software companies and also supporting research and development.
Fascinating. Turn it over to any of the founders who might want to sort of say something about the government and the way that you've been supported by them or otherwise.
Well, I'd echo Daniel's comments around, the great support that's been there with RDTI and, some of the structures that have helped get the funding market really going. I think that's been a huge advance, between 2012 and, where we stand today. So from that perspective, I think government's done an okay job. I think in terms of making sure that we can import talent, that's really that massive lever that we, that not only do we want to free up any barriers to it, we also want to encourage it and take one of those positive steps that we can actually make Australia a place where those people, whether they're from, Silicon Valley or from Israel or from the UK, where there's, various levels of high development in some of these areas. We talked about product management, software product management, and also growth marketing and things like that. Being able to bring them to Australia, I think, is what's going to really create that catalyst for the next generation.
Yeah, fantastic.
Maybe to talk just in fintech, I think it's actually an area where the government's done really great work and a lot of engagement sort of for the earlier stage companies. And so areas like Fintech Australia, a lot of engagement around open banking and many of these other reforms. So I'd actually give huge credit for what's being achieved. But I think when you get to a bit of a portfolio of companies that are actually started and it's now the scale up, the question is, what does it take to actually deliver benefits at real scale to the community, right? So whether that is creating export opportunities and all that comes with that, employment, or whether that's just actually delivering better services. And I think there actually just needs to be more of a focus on the quality of competition focus. Yeah. And so just the example, there was a lot of thinking early on in the COVID scenario, how do we not fall into the trap of repeating the GFC? And we went from non-banks being 30% down to sort of 5% of the mortgage market because of some of the decisions made in that period of time. It was a decade to recover. And unfortunately, we're now back into the place where there's, $200 billion subsidy to the banking system. Yeah. You're basically having, this, for all the good work in the early stage, locking customers into these home loans with, frankly, long, big sting in the tail with government support. And so I think that's the area where having the focus of, people like, the ACCC, much more around benefits delivery and these decisions that have decades-long consequences. So I think there's going to be a big test to see how seriously they're taking. We're right in the middle of a mortgage inquiry at the moment, whether that's insipid or whether that's actually going to really frame some meaningful reform.
Yeah, fascinating. Look, I'll be remiss. We're running out of time, and I know that the key question that I got asked time and time again, we took a whole lot of questions prior to this event, and everyone in terms of the viewers and the listeners find you guys and girls incredibly inspiring, and I do too. And so what they wanted to hear a little bit about is you as people and get some recommendations. So I've got to ask you 4 quick-fire questions, which are the following. First of all, what is your superpower? Second of all, what's your must-read book recommendation? Third of all, what's the best movie, TV show, or documentary you've recently seen? And fourthly, other than food, water, family, and your phone and friends, what could you not live without? Hope you remember all of those. I'm going to start with you there, Paul, over in Melbourne.
Oh, wow. Okay. Superpower, that could take me a while. Have you got a couple of hours? Look, I think it's just sort of synthesizing. I think it's sort of synthesizing broad amounts of information across, across different function areas. I've always been much more of a generalist than a sort of a specialist. That's probably as good as I get. I might take me a couple more hours to think of something else. So let's go with that. Movie or TV show, Loving Tehran on Apple TV Plus. That's a great watch. An older show, The Bureau, on SDS On Demand. Two great sort of spy type shows. One from France, one from Israel. I'm really enjoying both of those. Documentary, was that the next one?
It was book, must read book.
Paul doesn't read.
Book. Look, I really enjoyed. I think *Sapiens* by Noah Yuval Harari is an amazing read. I don't read a lot of biographies, but I thought Bob Iger's *Ride of a Lifetime*. I read that early at the start of this year. Was a really great book. Yeah, really enjoyed both of those.
Okay, and what could you not live without other than your phone, family, friends, food, and water?
It's grand final week, the AFL football.
Okay, great. Same thought to you, Manuri.
Okay, so I would say my superpower is probably to remain calm in heightened stressful environments, and then also lean on other people, mentors, teammates, advisors, to bring in those data points and make a decision. Books, I would say my go-to is always The Hard Thing About Hard Things. I use that as a bit of a manual, but in terms of a good read, The Originals by Adam Grant was great. TV show or doco, I actually watched General Magic recently. It's about building the first sort of smartphone in the early 90s, and they actually, it ended up failing, like the team, but then they went on to build eBay and a whole bunch of really cool companies. And what was the last one?
What could you not live without?
Not live without. Probably, and I guess relevant to COVID is like traveling up to the coast or the beach, or taking time to just like reset and enjoy nature.
Thank you. Over to you, Tim.
Okay, so the first one's superpower, right? So I would say being able to be open and absorb critical feedback and stay optimistic, even when receiving that, would be my superpower. In terms of books recommendations, I'd say Thinking in Bets, Annie Duke, is an awesome book about like probabilities and statistics and stuff like that. Also, I'd say Powerful, Paddy McCord's book about the HR playbook at Netflix is a really good read too. The third question was TV show. Yeah, I recently watched the documentary about how Rupert Murdoch sort of built that empire, which I think was on ABC. So it was a BBC documentary aired on ABC, which is really great. And something that I can't live without would be my dog Harvey, my Labradoodle. Yep.
Well, aspirational superpower, I think for us is focus. How do we just get a very targeted set of things we're working on? Reading the authentic answer is probably doom scrolling political Twitter following the last couple of weeks of the US election. The aspirational answer is the Anarchy by Willem Dalrymple that's sitting on my bedside table at the moment. Is just an incredible read about the Dutch East India Company and just the horrific impact that they had on the subcontinent. Movies or TV, we just finished the latest series of Killing Eve. Sandra Oh and Jodie Comer, I think, both just two incredible actors. So just love that. And then what we can't live without, well, we've sort of gone through a bit of a test case of that, and I can say there's a lot of things on the list, but the real answer for all of us is walking into the fourth supermarket and seeing there's no toilet paper in the aisle. Tell me that's not the real answer.
And finally, over to you, Daniel.
Look, I think I'm probably a better than average investor, but I think my superpower is empathy. I think I seem to have an ability to try and understand where someone's coming from and the issues they're dealing with, and try and show true empathy and for them. Book, I love everything from Yuval Harari, but I would say Happiness by Matthew Ricard. He's a Buddhist monk who is a biologist. It is the most important book I've ever read, and I go back and read it quite often. A TV series, I think I love two different things. Ted Lasso on Apple TV, which was just hilarious. It's a very light comedy, but Des which has got David Tennant, which is he's an extraordinary actor. That's fantastic. And what I can't live without would be a mix between Daisy, my border collie, or my mountain bike, which I'm obsessed with.
Fantastic. Well, look, I could have spent an hour easily with each of you, so I really appreciate having a little bit of time with all 5 of you. It's been fantastic to hear from you. I'm sure the audience has enjoyed it as much as me, and just wanted to thank you all very much for your time, and also for the viewers for this fantastic webcast we've done. I hope you've gotten a lot out of it, and we look forward to hearing the feedback and comments, and yeah, really appreciate all the time. And once again, thanks to panelists and all our panelists today. Thanks very much for tuning in, everyone. Thanks again.